All right, welcome to the show, Austin Williams. You're an East Tennessee guy. Sounds like you're related to possibly Dolly Parton down there. I don't know. Yeah, there's some good country music down there. Like my wife's a big country music person. I'm not like huge into country music, but I do know the popular people like Morgan Wallen, he claims to be a volunteer down there, and apparently I found out just for the pre-show that Kenny Chesney's down there too.
Yep, Knoxville's home to those folks, and that's just
And so do you actually? You said you live somewhere else, or do you actually live in Knoxville or a small town outside of Knoxville?
Small town right outside of Knoxville. So we're in the Smokies. Most Pigeon Forge, Gatlinburg. Grierville though is the county capital, and we're 30 minutes from Knoxville capital. You mean the house? Okay, I guess so.
So I definitely want to dive into that because I got a ton of questions about Knoxville, and Mike and I did some business down there a couple years ago, and also just like the Smokies and all this stuff. I want to talk about that, but for our audience that doesn't know you, why don't you give us a quick snapshot of like what you do now and like kind of what your business looks like and what you focus on?
Sure. So our business is Compass Ventures. It's a real estate development firm. Our vision with Compass is to create a vertically integrated company that can execute any type of real estate development here in the Smokies and really throughout East Tennessee. So what that means is having the development team, property management team, the financial department, the architectural team, civil engineering team, and then also the general contractor. So all aspects from, the inspiration of the design to execution all the way down to the management of the asset.
Let me ask you that. Like why vertical integration? And I ask that because that can sometimes, it seems like can go the wrong way where you're too spread thin, you're trying to do too many things, you're running essentially multiple businesses within one. But it sounds like maybe there's some benefits too from other vertically integrated companies I've talked to in other industries. So I'd love to hear your perspective on why that from a development standpoint.
Yeah, it's certainly, it is complicated because you are running, 6, 7, 8 different businesses. We've done, I think, a pretty good job of trying to make sure that they're all aligned and that we've got, employees that really function more like business partners, and they're bonused in a way that they're incentivized to profitability, which helps us to not be spread too thin, keeps me not having to focus on each of those departments, but also keeps them in line. For the reason we did it though, is because we got really frustrated with the typical model of having a development company that went out and hired an architect and a GC and a civil engineer and folks that have different priorities, right? Typical architect, civil engineer, their fees come from pumping out plans. How efficient or well-designed those plans are, I don't want to say it's irrelevant, but it's not their main focus, right? The more fees they have, the more profitability they have, right? We're all in business to try to make a dollar. And so we wanted to start bringing in those folks in-house so we could then incentivize them around efficient design and timely design, and then also allow them to be investors in our own deals. And so they're, again, aligned in a way that it really makes sense.
I really like that. So when you're talking about incentivizing and aligning people, and I'm just kind of imagining, I've looked at your website, kind of get your organization, but just I'm going to act, ignorant here. So you have you here, and then maybe you have like civil engineering or engineering in general or something like that. And the department head would essentially be a partner within Compass Capital. So they have an incentive to do well and to run it without you having to like kind of beat the drum for them, right? Is that kind of what you're talking about? Okay.
Yeah, that department head typically gets a bonus that's structured around department profitability.
Let me ask you this too, and you don't have to share exact numbers or details or percentages. When you do that and you have partners in these businesses, because Mike and I actually have a couple of our own like smaller businesses where we've partnered with people where we're not the main shareholder. But if you have like a business that you've started and it's 100% yours, how do you like figure out like how much of the company to give to a partner? Or is it a profit share? Is it equity? Like what have you done in your business? Like, again, you don't have to share exact numbers, but just kind of like roughly your thought process around that.
That I'm not sure that I've got a good blanket answer to that because each department has been a little bit different. I mentioned general contracting. It's actually its own standalone business. my there is truly a
Okay.
equity partner. It was a situation where we came across a great general contractor. He's a young guy with a really, really
Mm-hmm.
good team, but he was new in business. He needed, a little help in figuring out how to structure his business for growth and how he could scale it, and then also the
Yep.
financial backing to do so. And so actually January 1 is when we, joined forces and now we've
Nice.
got a partnership. So, but he saw the vision that, hey, all of these aspects just spin the
Yeah.
flywheel faster and faster, right? Every time that he has a new build or a new development, someone calls his company, well, they're going to need the architectural services,
Mm-hmm.
civil engineering, they're going to need management, they're going
Yep.
to need all aspects of it. So there's so many good aspects for the referral sources from each of
Sure.
those departments. And that's another piece that's been really
Yeah. That's
helpful
good.
for
You
us.
probably didn't think I'd take it that way, but I'm fascinated because Mike and I are constantly like looking at kind of our holding company and like what's the best way to set people up for success and incentivize them. But let's talk into like how did you get there? Because I'm sure you didn't like wake up one day and you're like, I'm just a real estate developer. I have a vertically integrated company. Like where did you start out and like how did that process? Tell us that story of like going to Compass Capital.
Yeah. So, my great grandfather started a local hardware store in 1952 that all the family
Wow.
really went and worked at. Now I worked at, pushing a broom, carrying sheetrock, lumber, stuff like that as a kid. So I grew up familiar with, construction.
Mhm.
And then my dad had built a few spec homes and, so, somewhat familiar with small scale development like that. I spent 7 years out of college though as a financial planner. Well, I noticed that my wealthiest clients were in real estate for the obvious tax
Right.
advantages and leverage and all these things that help. So, 3 or 4 years into that, in 2012, we started buying single family homes. And, it was interesting. So my first deal is me and an architect, 2012, we were in our early 20s, and we were buying a 1,200 square foot, 2-year-old home that was in foreclosure, like many homes were. We bought it for $32,000. We each had 10 grand a piece, and we couldn't get any bank in East Tennessee to give us the additional 12,000 close. So, swallow my pride, and I go to my grandparents and ask for a small loan, which they were happy to do to help me get going. 6 months later, one of the banker calls back and says, "Hey, Austin, sure y'all still have that home? You got it renovated? Is it rented?" I was like, "Yeah, it's rented for $800-900 a month, whatever it was." He said, "Well, we can loan you $86,000.
That's a lot of money.
Jared was asked it. Jared, you wouldn't give us $12,000 6 months ago, but now you're willing to give us 86. How does this make any sense?" And I quickly got a good education on leverage and how banks think, and so we got that loan. Took that 86,000, bought 3 more, did the same thing, bought 9 more, and then you fast forward 4 or 5 years, and we've got a pretty significant value add portfolio of single family homes, storage units, strip centers, office buildings, just an assortment of different assets, all value add stuff. 2017, I partner up with a developer who had quite a bit more experience actually he had a ton of experience in development, whereas I had none, but I had a lot of experience in long-term rentals where he had none. And we built a 204 unit. That was my first step into real estate development. He's now my partner in Compass Ventures, and many other things that we do, but we've done several ground up developments since then. But that was sort of the story and the progression of how we got into development. We still do a ton of value add projects, but also a lot of new construction.
That's an incredible story that it seems like you condensed a lot. You condensed a lot because I know it wasn't that easy to get to where you were at. It took you more than 5 minutes to get there in life, right? So good job telling that. But the interesting thing I find about your story is it was literally logical, right? You bought this property, and then you're like, oh, I think I've got something here, and then you kind of doubled down. It got a little bit bigger. How when you partnered with this developer, I'm just curious, how did that relationship spark? What was the initiating conversation where you were like, I think that we can build a 240 unit apartment complex together.
Yeah. So I don't know. One of my clients that I had when I was financial planner had invited me. He knew that I was starting to, deal a little bit in real estate, and he invited me to a breakfast group with, there's 8 or 10 other developers, business owners here in town that they grab breakfast every Friday at 8:00. And so they invited me to it. I was like, yeah, great opportunity to show up and learn and just listen. Well, after a few years of being at that, I kept saying there's a huge need for apartments here in the Smokies, huge need. And finally, after, years of me just telling the group that, Jimbo, my business partner, said, hey, I've got a great piece of property. Let's go look at it. So we drove to it. So that progression was just a lot of time spent at that breakfast table talking about business and life and everything else. And then having heard that so often, he's like, well, let's go look at this. And that, over many more conversations turned into a business partnership and a tremendous friendship as well.
That's pretty incredible. A breakfast. I wonder if they have something here in town where we could do that. I'm a breakfast guy too. I like to get up early, go have some coffee, go some breakfast. And if I can talk business, I'm going to be even more happy. It's not that. So you were doing this on like one of the, I think, big upswings you were investing in Knoxville before it was cool. On like Mike and I found Knoxville. Literally, we were very agnostic. Like I still have never been there. I flipped a house and made like 30 grand down there. I've never been there. But we were looking at it very agnostically at just the numbers. Like we were looking at markets in Florida, markets in Texas, markets in the Northeast, Southeast, all over the place. And Knoxville, we liked it because it's not a super big town, but it's big enough. It's close to it's not the primary market in the region, but it's like a big secondary market. When you hear about, people going to Nashville and all these things, that's what I mean by secondary. Like you go to a top 10 list when we are looking at it, top 10 invest in this place, it would be Nashville. You didn't really see Knoxville. You didn't see the Smokies, but COVID hit and all of a sudden everybody started going down to the Smokies and buying up $1 million cabins, which I just want to ask you about this, like $1 million cabins and some of these houses they're buying. I gotta imagine there's guys losing their ass. Do you look at some of that and you're just like, oh yeah, that's a bad play? Or are you so bullish on the area you're like, you could buy anything, it's going to go up?
I'm extremely so.
I think so. Yeah, I actually think you're right.
I am extremely bullish on the area. The Smokies grows during recessions, and it's continually done that. So COVID, I feel like the world found out about the Smokies during COVID for various reasons, but I think the main one being everybody said, hey, we want to get out of, populated areas and let's go get a cabin in the woods. And then, oh my gosh, there's this great investment opportunity and things blew up here. I think that continues mainly because, I've heard for years that 2/3 of the population in the United States is within a day's drive. Well, think about the mass migration that's happening to the South. So that number will rise on how many people can actually drive here within a day. During recessions, it grows because people who might take, several week-long trips might, on vacation throughout a year in good times, maybe they cancel one of those trips or two of those trips and then take a trip to the Smokies. We've got a really high retention rate on first-time visitors. So then those people end up making hey, let's take a trip or two to the Smokies every year. It's for that reason our base continues to grow, and so long-term it's good. Now, some of the cabin prices that we saw in 21, 22, they were certainly high. They've came down 10 to 15%, so I think they've reached a point that makes more sense now. But 21, 22, there were certainly some purchases that were.
Yeah, we were. I'm not going to quote the exact numbers, but Mike and I were talking about somebody down there, and on the good side of things, that maybe paid like $800 for a cabin down there, and is like selling it for like 1.2 or 1.3 a couple years later. So there's some people got some great upswings in appreciation. So okay, let's talk about that back in the concept of development. I'm personally fascinated with the idea of developing. I just like that. It feels like progress to me. You get a little bit of the capital side of things, like the money, the finances, because you can't just go build a large scale or even just any type of development without some sort of financial, savviness, and then also the construction savviness where you can obviously make things a little bit nicer, better, more efficient, whatever. When you're looking at development opportunities, what are you seeing? And for a lot of the folks a lot of the operators that work, that are in our scale community, which is our coaching community, or just that are listening, they come across land all the time, or maybe properties that could be redeveloped. What is somebody like you? What are you looking for when you're like, that's what I want to buy that, or I'm at least going to look into running the numbers on this piece of property or this project?
We're so for our company, we're usually developers are hyper focused in the asset class, right? They're a multifamily guy, they're a storage unit guy, they do retail centers, whatever it may be. We're hyper focused here in the Smokies. So given those answers may not be fitting to the listeners for a particular area, right? One of the challenges here in the Smokies is that we don't have a ton of infrastructure for something like multifamily, for instance. There's a limited amount of space that has access to water and sewer, and to get any effective density for an apartment complex, you got to have both, right? And for those sites that do, a vast majority think that it should be a hotel, it should be an amusement, it should be a campground, something that's going to be a sky high price. And so, it's the tricky part here is finding that piece of property that the value is at the right place, that also has the infrastructure to be able to make the site work. And it's typically off-market deals. I mean, obviously off-market deals are always the best. So I'm not answered your question, but I'm not sure I've got great metrics.
I think we'll dig into
outside.
it. Like, let me ask some more follow-up questions. You said off-market. How are you finding the properties you're developing? Like, what is your strategy?
We've got, fortunately, where we've created that vertically integrated company, we get folks who reach out all the time and they say, well, hey, we know that you've done more multifamily here than anybody else in town. We've got a site that we think would be good that, the family's wanting to sell. Or, and if you don't want to take it on, do you know somebody that would? And so we get calls like that oftentimes. But we'll also spend a lot of time looking at maps, sending out letters, like I'm sure a lot of folks do, that, hey, we identify that water and sewer's here. Yeah. This area needs whatever the site is. And so we'll send out letters, or oftentimes, know somebody that knows that person and just be able to reach out to them.
So it sounds like you have kind of a plan of like, these are the things we can develop. These are the requirements, like you said, water and sewer, things or other requirements. Like, hey, there's only so many like permutations of what we can do, and it's based on what the environment is allowing us to do, what's out there, the infrastructure, the market, the density. And then you're just going and looking and saying, well, these are the only pieces of land that fit into that. So we need to look at these and then like take offers to these people, essentially. Yeah.
That, and, we're a small community. There's a little under 100,000 people that live here. And so it's easy to find a lot of people. But then additionally, we've got a lot of partners and investors that are somehow right on the edge of real estate. So maybe it's an estate attorney, right, who finds out about stuff before a realtor might. Or, similar type professions that they know about deals. They're not in development. But when they find out about them, we usually... the news gets to us.
That is the advantage of not only being a small town, but being considered an expert or a knowledgeable person. And you do have people. So actually that brings me another question. So you are vertically integrated for your projects. Do you ever actually do other people's bid? Like, will your architects do architect design? Will your engineers do engineer design for other people? Okay.
Yes. About a third of the stuff that we facilitate here is out of house, on own projects. Sometimes that's for a local developer that we work with. Sometimes it's for an institutional group that might invest money here in the Smokies, but you don't know, boots on the ground. So, but it's usually only for that developer individual that we typically do.
I mean, that's just such a great idea too, because not only now do you have organic lead flow coming to you because you're known as experts and people are asking you like, hey, would you want this project? But you also have leads coming to you because people are looking for work, or they're like, hey, I'm looking at this piece of property. I talked to the seller and I'm wondering what I could do here. And now all of a sudden you can become a partner on that project, or maybe just take it over and figure out a good way to help compensate those people that are bringing that into you. Yeah. That's great. Yeah, so the other question I have, your company's called Compass Capital, not Compass Development. Compass Ventures. Compass Ventures. But good. You're a development company, so when you say that, like, I say that because like you have to raise capital, or are you guys doing this all within your own partners and your own finance? Like, how are you bringing in investors to do this stuff if you are?
We actually just started bringing in investors about 18 months ago. Everything before that was we were having to sell, previous successes to find the equity and the cash to do the next 2 or 3 projects. And that became exhausting. And so we ventured into figuring out how do we start raising capital and bring investors in on deals. So, right now we do that a couple of different ways. We've got, a very limited, I guess what you would call retail platform, where we're dealing with local investors. We're sort of figuring out what makes sense there, folks that we know, friends and family type stuff. But then we've also got a few institutional groups. And both setups have pros and cons, and we're sort of figuring out right now what makes most sense for us.
And I can definitely, and I know a lot of listeners can really empathize what you're saying. Like, it gets exhausting, like build, sell, build, sell, build, sell. We see that. We do that a lot with house flipping, which is a lot easier than doing a big development. But it's like you flip the house, sell it, maybe put some profits away, maybe eat some of your profits, feed your family, and then you're doing it over and over again. It's just like fast cycle that just you see the value over the long term. When you look back, you're like, wow, I wish I could have kept some of those properties, and why didn't I? But when you need the money to do the next project, you do that. You have to. And it speaks to the ability to leverage. And I talk to a lot of people doing house flipping or smaller projects. I have friends that are doing some development stuff as well. And like the idea is like, I can't wait till I have enough just to do this myself without having to get a loan or do this or that. And it's like, well, do you really want to get to that point to where you're only using your cash? Because then you're just always using your cash. Or are you better off building the skill of bringing in partners, bringing in investors, giving a piece of the pie away, but you can do so much more and you can move so much more quickly when you have more liquidity through leverage and through other people. So for you guys, when you're doing this, is that kind of what your play is? Like, now bring on investors. Maybe you don't have to sell. You can keep these, and then you can build a portfolio of assets that are producing income for your business. Right. Okay.
That is the hope, that we're not sell. Now, as I sit here and say that, we still have plenty of things that we're selling. We sold, a couple of cabins this week. So it's always a balance. And I mean, everything's for sale for the right price, but the intent is that we will start holding on to more and more things, and that we won't be forced to sell off good cash flow assets. So
you say cabins, that actually brings me up, because I'm like, I've got your website up here right now. I'm looking at, these are some pretty cool projects. Like, these are like legit large projects, but, do you guys develop and, do single family stuff right now, or like cabins or things like that? Or like, how do you do that when you're picking projects? How are you looking at that?
So for us, we've got 3 core pillars that Compass focuses on. One is solving the workforce housing crisis here in the Smokies. So we quantify that by saying 2,000 residential units built by end of 2027. So that can be multifamily, single family, duplex, triplex, whatever it may be, but long-term risk. We want to revitalize downtown Sevierville, which we quantify that one by 30 different businesses or developments in downtown by the end of 2027. And then third is turning Sevierville into a premier resort. And there's several things that fall under what defines that, but effectively it's building 1,500 short-term rentals here in Sevierville by the end of 2027. So that's our company's focus. You know, it now. How do we decide what we're going to do where? I mean, it sort of comes back to that deal flow. It's like, like we've got a cabin development right now, 177 units on 105 or 110 acres. A couple of years ago, a partner found, and it was an off-market deal. He cost it to us, and it just lent itself great to a big cabin resort. So that's that is actually our biggest project that we've ever taken on. And another deal is a great multifamily site that, again, actually a realtor had heard about the deal, and before it got listed, called, and we hopped on the deal, and it's an apartment complex. So, I mean, it sort of depends upon the deals that come through, but those three core pillars are the things that we're focused on.
So are you in a position where you have more deals than money, or do you want more deals?
No, we're certainly more deals.
That's a good problem to have. Yeah.
It's great. Yeah. Which is again why, the investor piece is like, we've got to figure this out.
Yeah. Yeah. That's kind of where Mike and I are with our business on the residential side, is like, we know how to turn up lead flow and deal flow. Then it becomes, do you want more? And then if you do want more, can you handle more? Like, because eventually, especially right now in like a lending environment, if you're relying only on debt to fund your projects, you're not going to be doing as many projects as you could have if you have investor money coming in.
Right.
So, let me ask you about that development, and then I want to pivot because we're kind of running short on time, and I'm just so curious about all this stuff. But with that cabin development, what does that look like for you guys? Are we talking like little teeny 1-bedroom things? Is this a resort feel where they have clubhouses, pools, all that stuff? What does that kind of project look like?
Yeah. So the project's the lodges at Reedmont. It's like I said, 177 units. The majority of those units are 3, 4, and 5 bedroom units. Different variations on floor plans, but they're 24 to 3,400 square feet.
So these are proper houses. You call them cabins, but they're proper houses. Yeah. Okay.
Yeah. 80% of them have a pool in the basement.
In the basement, really? Indoors?
Yeah.
Wow. That's unique. Is that something common down there?
It is a new trend. It usually will bump rental revenues by 20 to 25% on that particular unit. It's not a huge cost increase. And so it's a no-brainer. And so we started doing that on, like I said, the majority of our cabins, about 80%. So it's right up against the golf course here in town and the biggest water park in the state. So there's not a ton of on-site amenities. We'll have some walking trails, but we've got so many things that are, basically.
Well, you're obviously a very humble guy, because you're talking about a lot of things that these are big projects. You talk about them as if they're simple, but I know they're not. There's a lot of complexities here, and it's not easy to put this stuff together. So definitely, I know you're doing some stuff. Let's pivot to our end of show questions. The first question is, what is your craziest real estate deal? This could be a big win. It could be a big loss. Our one rule is no more dead people, because we've had so many people come on here and talk about how they found dead people. Unless it's really crazy, unique story, I will accept a dead person. I know sometimes Mike won't, but I'm game to get morbid. Anyhow, let's talk about what you got going on, Austin.
So I think the craziest deal that we had was one that we actually bought at the end of September in last year. So we have we've got a multifamily guy here under Compass. That's his thing, is to find value add, Section 8, HUD, or really even market rate multifamily deals. He had found a project, and it was one that had a limited partner that was a general partner that was a nonprofit. They own 0.1%. And then their limited partners own 99.9. Well, there's a unique rule. But let me back up and give you some of the details on, it's 150 units we bought for right at, I think it's $3.2 million. And obviously, at $20,000 a door, it's like, how in the world can you buy anything that's structurally sound at that rate? Well, unique because so it was devalued for a couple of different reasons. One, the general partner had not increased rents in 15 years. So there was about a 40 to 50% rent increase opportunity. 25 units were vacant. But the biggest piece that caused complexity was the city had a reversion clause. So 30 years ago, they had donated the property for this development to be done. And there was a really, odd item that was hid that at the end of 2029 or 2028, they could buy the property back for $100. So, obviously if you've only got 4 or 5 years left on that asset, it creates a huge devaluation. So, additionally, it was unique. The general partner could buy out the limited partners for the debt, which was much less than that 3.2. And there's all sorts of other dynamics that fall under that. But we bought the asset, renovated the units, increased the rent, extended with a few items, extended the that reversion clause out 30 years. So now we've actually got something we can get financing on, and it's got a lot, longer trajectory. And we increased the value of the property by a little over $11 million. So that we basically 5x the value of the property overall, and created a ton of equity for ourselves and for
so you
our
still
investors
own
in
this
the project.
asset? Yeah, nice.
We do. We're actually in the process of refinancing it for long-term debt, and but it was really unique. That reversion clause was something we had never seen. Our multifamily guy finding the ability to buy the general partner, to be able to buy out the limited partners. I guess another complex thing about that was the general partner, being a nonprofit, could do that only if they bought it with cash. So you couldn't get bank financing. The general partner, being a nonprofit, didn't have cash, so they had never thought about it. And it was just a lot of complexities that it was a tremendous value add by.
Because maybe I missed this when you're talking about that general partner LP structure. Obviously, you're saying it's a nonprofit. Was it because they were trying to do some affordable housing? What was the reasoning for the nonprofit?
Yeah, it was. Okay. It was a tax credit deal originally, and so that's where the GP only had 0.1%. LPs had 99.9%.
Yeah,
they had done this deal 30 years ago, and so
it did. Yeah, and I'm thinking about it too, because then I'm like, man, this sounds like a terribly managed GP. Why not raising rents? They didn't do any sounds like vacancy, so no property management, and then no raising rents. Was it because it was low income? They're like, hey, we've gotten what we wanted out of it. We got our tax credits. Nobody cares. The investors didn't care anymore.
That was a piece of it. The investors certainly cared, but they couldn't get over that reversion clause. Right? How they couldn't figure out, how can we, get longer term financing? How can we put, hundreds of $1,000s into renovating these 25 units when the rents we're going to be able to get don't make sense when there's only 4 years left. So that reversion clause was something that nobody could figure out, that nobody wanted to bring up. For us, it was real easy to hop in and figure out how to work something out with the city, so it was a good win-win for everybody. We extend, big problem here in town is everybody's buying long-term rentals, turning in short-term rentals. Well, for us, we put some restrictions on there to where that can't be done for the next 30. But we didn't mind, because we want to keep it as
totally. Right? And the city's probably happy about that. Kind of helps your guys' case with them. So when you guys bought it, did you have any inclination that you were going to be able to get that reversion extended, or was this just a total blind risk you guys jumped into? Or like, YOLO?
Not a total blind risk. We had pretty high level amount of confidence that we were going to be able to. We weren't able to get that done during due diligence. The GP only had it was like a 30-day window to execute that unique provision where they could buy out the LPs. But we'd had plenty of discussions and thought that we'd be able to make it work with the city. So we at least knew what they wanted to see happen. And
and that makes total sense. And I wanted to ask that question too, because when you're looking at doing some of these projects, what I've learned over the years is you can't know everything and you can't have everything solved before you close the deal. But if you see something, like there's nothing wrong with doing your due diligence period, setting up some phase gates, like especially when you're doing land development and there's so many unknowns and so many risks. Setting like hard like dates when you're more and more earnest money goes hard, right? Like, hey, we get through this, the first phase gate on a development project might be like, hey, if we can get zoning changed, we're going to throw another $100,000 in hard earnest money, and then hey, if we can get our plans approved, so on and so forth. If it's a really risky deal, doesn't mean you need to avoid it. Like what you guys did was obviously that was a risky deal. They couldn't solve it, and you guys had to take some risk, but doing your due diligence process obviously found like, okay, we feel confident enough that the asymmetrical upside of this deal is worth the downside risk. So,
yeah, exactly. And I mean, value add, obviously there's a certain set of risks. New development, there's a whole, much longer list of risks that are out there. But I think a lot of folks get caught up on new development, never getting into it, because they want to have everything, every I dotted and every T crossed, and you just can't. There's unknown risks that you'll totally always forget about. Not to say that we don't want to find them, but you just have to be comfortable.
Totally, I agree with that. Okay, that's awesome. Big win too. Good job, man. So the second question we have for you is like, what advice would you give like a new investor or somebody looking to get started?
Well, we've all heard you become the books you read and the people you surround yourself with, right? Just like the breakfast group that I mentioned earlier, find a group of, developers or real estate investors or people that you want to become like, and just soak up that knowledge. That was a big impact for me, just being around those guys and listening to their conversations. So I think that's the biggest piece of advice, is just,
that comes true time and time again. And, we have, I mentioned earlier in the show, like our scale community where we, Mike and I do some coaching with folks, but really the key word in that is community. And it's super cool. People get in and they do deals with each other. They, you get to see somebody who shows up with no experience or hasn't ever done a deal yet. And all of a sudden they're an operator and they're doing deals. It's just getting around those people, and like that osmosis is real, but also it's just like you learn things and you build confidence. You're like, okay, so when you're like we just talked about getting into land development, like there's just so many unknowns and risks, but if you get around other land developers, you start learning what risks are acceptable and that there are a solution to. You just have to get down the path far enough to find the solution, and what ones are like hard no's for people, like, hey, that risk, we don't do it. And you learn why. And so to me, that helps quell some of the fears of getting into something new. So that is such good advice. I like that. And you're right. It is. People say it time and time again because it's true. It's a fact. So, all right. Last question, the toughest one. Where can people find you or reach out to you either online or websites, or how can people get connected with you if they want to chat with Austin Williams?
Sure. So our website, compassventures.net. My email address is Austin, AUSTIN, at compassventures.net. So either one of those, you can reach out to us. And
heck yeah. And Mike and I always say this on the show, reach out to people. If you found something that was inspiring, let them know. If you have a question, let them know. If you want to do business with them, let them know. People come on here for a reason. It's because they want to talk to people. They want to get in front of our audience. And there's always some sort of mutual benefit. It's always mutually beneficial to connect with people. So take Austin up on that. Without further ado, man. Thanks, Austin. This is awesome. That's great. I learned a ton from this show. I appreciate it.
Thank you.
All right. See you guys.